Italy is continuing to drop as stocks, particularly in the banking sector, have fallen dramatically. The financial media has suggested that there's nothing to worry about because the ECB will be there to save the day. But the truth is that the ECB has already been printing money and bailing out Italian corporations for years, and it still hasn't prevented the deflationary collapse from happening. You came here for the truth, so let me unveil that for you. Today we're going to have our focus on Italy. If you are in the surrounding area or anywhere in the world for that matter, you need to pay attention to this. It's going to be a jam-packed episode. I have way too much to cover. I'm going to go through it quickly or else it's going to take me 20 minutes long. Let's see how I do. Beginning with the 2-year yields. Draghi made this promise a few years ago that they would stop at nothing to ensure that the system does not collapse. So you saw the 2-year yields declining slowly but surely. And when it hit the lowest ever practically, suddenly things changed in an instant. And yields rose. And in fact, they rose the most one day in a one-day span ever in history. The biggest one-day move ever in history on the 2-year yield. On the 10-year yield, it was the biggest one-day move that was seen since 2011. That's the sovereign debt crisis timeframe. So we have a lot to worry about right now in Italy and the surrounding areas because of the contagion effect. And I'll talk about that more in a moment. But you can see here on this chart that we have a heavy burden that's placed upon those in Italy in the financial sector, and then that spreads out into the other sectors, will spread out into other countries as well. Italy, Germany, 10-year spread, a lot has changed there again in such a short period of time. Italian stocks have dropped. As you can imagine, this has been a roller coaster ride in this time frame here over the last month or so, as they're worried what's going to happen with the government. Is it going to go this way? Is it going to go that way? How is that going to benefit us? How are we going to lose out? Are we going to leave the Eurozone? Oh my goodness. Okay. And you look at the banking index entering a bear market. So obviously the financials are taking the beating first, and then that's spreading out through the other parts of the stock market, other sectors. And then there's the contagion effect. Again, we'll discuss that more in a moment, but that's that. And I want to show you the banks, top banks here, including Monti. Now, Monti was one that was bailed out by the government. So they came in, they stepped in, they said, we will stop any losses. We're going to make sure that this bank stays alive. I find this interesting because even though clearly the government will not let this bank fail, the ECB is printing up money and buying up corporate debt of this company, you have every reason to believe that this stock will not crash, and yet it still did. So with all these safeguards, these safety nets, this insurance that's been put in place to make sure that these companies stay afloat, stay alive, investors have been pulling their money out. So you tell me, why is this the case? There should be every reason for investors to just pour in their money now. You know they're going to bail it out from the government or from the ECB. And they've been doing that. Well, that's what people don't factor in places like the US. Oh, I can buy this stock because I know that the Federal Reserve will be there to backstop any losses. But we have a different situation here. And a lot of people will say, oh yes, but Italy can't print their own money. It doesn't matter. The ECB is doing it. The ECB is doing it today. They're not going to do it. They're not going to do it in the future. They're literally doing it today. They're printing tens of billions of dollars every single month, and they're buying up corporate debt of companies like Monti and other financial institutions in Italy, a whole bunch of institutions within Italy, making sure that the entire system doesn't collapse as the deflation sets in. You're looking at Deutsche Bank. They've moved below the $10 mark, and that is very significant psychologically, but also showing us the weakness. Now, this company here is doomed to fail. However, it's too big to fail. So they have a little predicament on their hands. What do? It's impossible to bail out, but it needs to be bailed out. Now, Deutsche Bank is very important because it has a very, very large derivatives exposure. In fact, it's one of the biggest in the world, give or take, on any given day. This is an important company systemically within the Eurozone as well as the whole world. Keep your eyes on this, definitely. Look at the sea of red. Everywhere you turn, there's nothing but red. They are worried about what's going to happen to Italy and how that contagion is affected in the rest of the Eurozone. This is causing everything to drop right now. They're just overreacting to the news. That's usually what happens, even though they should be dropping. But this is what occurs. Some piece of news comes out there and suddenly everything starts to fall. As hedge funds scour the globe for weak spots in what have been mainly placid markets, Italy is becoming a prime target. Bets by hedge funds against Italian bonds have risen to levels not seen since the financial crisis. In a reminder of latent risks in the Eurozone, bets have mounted throughout the year, with the trend accelerating in days and the fears that Italy's new anti-establishment coalition government will add to the country's large debt pile and potentially loosen ties with the European Union. I wish that they would loosen ties with the EU. I wish that they would be set free from the chains, from the shackles that are in place right now, but I don't think that's going to happen. Look at Brexit. They said they were going to do it. They signed it into law. They said, this is going to happen. Let's go for it. Everybody cheered. They said, look, you said it was going to happen, and now it is. And here we are today. Nothing has happened. Well, that's the way it goes. The technocratic elite will say when it can happen. They have to make sure that these countries are beaten to the bottom, beaten down. They take all of their assets, and then you say, we'll set you free now. Just like the IMF does all around the world. Okay, moving on. Here we go. Rome is smoldering. Hedge funds have raised their bets against Italian bonds and are profiting as the spread widens. Demand to borrow Italian government bonds. Look at what has happened here in recent years. Hey, they're looking for reasons to buy, and they need profit. When you can see that, there have been times in which these very, very risky investments have been very profitable. Of course, we saw that during the housing crisis, buying up all these so-called AAA rated investments that didn't exactly go so well, and but ultimately you just get a bailout anyway, so they're not really worried. Lower Eurozone interest rates, the ECB's other bond buying program, the one undertaken as part of the QE and that is set to continue at $30 billion a month through at least September, has dragged down government and corporate yields across the Eurozone. As a result, Italy's debt service costs should barely increase even as yields rise. Don't worry, everybody. Everything's going to be fine. That's because the average yields are still far lower than the average outstanding coupon. Noting that Commerce Bank's forecast already assumed the deficit would rise to 3% of GDP this year and 3.5% the next year, and it goes on. Just want to cover this quickly, okay? As the result of the ECB's purchases, only 32% of Italian government bonds are still held by foreign investors, and only a third of those are held outside the Eurozone. That compares with more than 40% before the sovereign debt crisis. Look, it's a problem no matter how you look at it. What I need to stress to you is that the only person or only group or only investor that's really buying in right now are the ECB and the government in Italy. Okay, I'm going to show you that more in a moment here. Investor base of government debt, percentage of outstanding government debt. Now, that might be a little bit confusing to see, and the font's probably pretty small, so I'm just going to cover it very quickly. We're looking at different countries around the world and who owns their debt. Okay, this is actually a really good chart that I found. It's from the Biz, so it is reliable data that they're pulling from Basel. They're pulling from the IMF stats, and I want to show you something here. This darker blue color is domestic banking sector. Okay, and in Italy right now, it is looking like about 30%. 30%. So that is a significant number owned domestically by their banking sector. Looking at the central bank would be this green color in here. in contrast to that, right beside is Japan. So you could see that their central bank owns a huge chunk of their debt. That is very, very clear to me. And domestic non-bank financial institutions also owns another big chunk. So I just wanted to show you that the comparison, not only to other countries, but who owns a lot of that within the country itself. So it's something to note in a country like China, where you have this domestic banking sector owning practically everything. However, we don't want to discount the fact that the central bank does own a lot, and they are printing more. Now, they're able to skirt around a little bit of the definition of all of this because they are doing so through subsidiary companies. They don't necessarily just inject directly like the Bank of Japan does, as an example. Okay, and all countries are doing this, of course. You could see what Canada has done. Their whole method is basically, let's do what everyone else does. So there they are. Anyway, so very quickly here, last one. When I look at this is a translated article. Italian debt accounts for 40% of the Sabadell portfolio. Now, I think this is a problem because, as I've said many times, the contagion will take effect. You can see this here. When 40% of their portfolio is another country's debt, and that country is happening to do very, very poorly right now, what do you think is going to happen? So this is what you need to look at. Understand, hey, that's Italy's problem. It's not ours. No. Think again. Understand that companies, that governments buy debt and buy into corporations that exist outside of their borders. That is so crucial to understand, and I would say upwards of 95% of people who are paying attention don't understand this. The contagion effect is so important. I wrote about it in both of my books. I talked about Spain. I talked about Italy and how they are very, very important to keep our eyes on, not just Greece, but also Spain and Italy. Very important, very crucial. And right now, Italy is the one we've got our eyes on. So I'm going to end it right there. I hope I did it pretty quick. And I hope that it was informative for you. If it was, please give me a thumbs up. I know I like to rant. I know I like to rave on and on, but I hope that you get some pieces of good information from this. And that's all for this video. If you found it informative, please give me a thumbs up. And if you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you need to do is go over to Amazon. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.